Hi everyone, welcome back to the individual taxation classes. This class is thoroughly dedicated to a special topic, which is installment sale. Yes, this is very special topic and heavily tested in your enroll agent exam. So I request you to go through in detail along with me, and in this particular video I'll be walking you through step by step for all things you need to keep in mind for installment sales. So let's dive into for more detail. Hi everyone, welcome to the US taxation class. So we are done with chapter 1. We are in the middle of chapter 2, right, which is like income and asset. So let's see what all things we have covered so far and what more we still have to crack in chapter 2. So if you see in chapter 2, which is income asset, and you can expect around 21 questions from this chapter. So we have like type of income, which we have covered almost everything in the last class and day before that, which include like wages and salary, tips income. And then after we covered interest income, dividend income, rent, royalty, gambling income, and losses, income from waiver of debt. And in the last class, we discussed in detail about foreign earned income and other income, right? So today we'll be covering installment sales, then we'll cover cryptocurrency, then we'll cover non-business bad debts, and lastly we'll cover pass-through entities. So these are the 4 topics we are planning to cover in today's class, and we'll also do some practice question also. Now I think for second chapter I'm not sure we have done any practice or not, but today we'll be investing some time in doing practice also, right? So let me take you through to the installment sales. So hope like these notes are you guys are familiar, right? Did you guys get a chance to go through the notes yesterday or not?
सर आपने शेयर नहीं किए थे?
No, I think I have shared. Divya, have I shared or not?
No, sir.
No. Okay, so then it's my bad. Okay, so I'll send it today.
तो बच गए.
I know. So Divya keep checks on whether I'm sending the notes or not. But yeah, thanks Divya for reminding me multiple times. And sorry for all the time keeping you waiting. Okay, so we covered all this passive income also yesterday. And we covered rental real estate exception. This also we have covered yesterday. And then we did some practice question also, yes. So yeah, from installment sale we need to start today. So what is installment sale? What, like, do you have any idea what is installment sale is all about? Because Rajat, Divya, Shubham, any idea what is installment sale is all about?
No, sir.
No, sir.
Divya, Shubham, you guys have any idea?
So it's like mortgage, like you making the payments over a period of time.
Yeah, very true. So, for example, if you went to purchase any machinery, let's say you're planning to set up any plant and you wants to buy a machinery, and you are a startup like us, for example, and no bank is providing you loan to purchase the machinery, and you discuss with the vendor and get into an agreement for installment sale. So for example, let's say the value of the machinery which you want to purchase is, let's say, $100,000. And you want to buy this machinery, but you don't have the $100,000 cash. So, and you are trying to reach out to the bank for the financing and funding support. But unfortunately, as you're a startup, you're not getting any such kind of support. So finally, you entered into an arrangement with the company who is selling these machinery, and you said like, I'll pay you $10,000 a month, or let's say $5,000 a month over the period of 24 months. That means the installment is $5,000 and you'll be paying $120,000 over the period of 2 years. So, right, in this $120,000, there are two things involved. One is like financing component, which is how much? 20,000, right? And the second is profit margin also. But in the past experience of the installment sales are generally not good in United States of America, right? So what they say, like even though you have given the asset to other person for the usage, but it's like still mortgage on you. So right and title of the asset is still with you as a seller, right? It will be transferred only and after the last installment you have received, right? So this the lawmaker says the risk and reward and the ownership of the asset is being transferred from seller to the purchaser on the last installment till the time seller has all the rights to you can say repossess the asset. If at any situation like the buyer does not make payment of the installment, then seller has the right, absolute right to repossess the asset, right? So that is what is installment sale. In the installment sale, you give the machinery to the customer on a EMI basis or installment basis, and those installment do include both your profit as well as the financing components, right? So simple, what is installment sales is all about, or anything you guys need further clarification on this? Divya, Rajat, Vikas, so far so good?
Yes, sir.
Perfect.
Got it? So in the tax purpose, the choice has been given to the taxpayer that in which method you want to consider your installment sales should be taxed. It can be the ordinary business income or loss, or you can choose to consider that as a capital gain. So there might be a possibility, let's say you have some machinery, or let's say you have some car, and you give to some third party on the installment sale, right? In that case of scenario, you can consider that sale to be calculated on a capital gain basis rather than your ordinary source of income. Now, generally in US, people do not make much sales in installment sale because in the history they don't have great experience selling at the installment sale. Rather, they advise the customer to go to the bank and take the loan and then pay the EMI to the bank rather than taking the asset directly from the vendor, right? Because in the past, like they don't have any great experience of dealing with the installment sale. But here, from the tax point of view, the lawmaker has given the option that as a taxpayer, you can choose either to consider the installment sale for a capital gain or loss method of taxing or the ordinary income or loss method, right? When you can consider that installment sale to be in the capital gain rule. So that is called installment sales rule, in which you can tax at a lower rate for the installment sales. Whereas in the ordinary income or ordinary business income loss, it is considered slightly higher rate than the capital gain rate. So in which situation you can consider or you should consider this installment sale method sales to the capital gain purview, or when you cannot consider it in a capital gain purview. Let's understand that. First thing is the rule applies when taxpayer receive at least one installment after the tax year. That means the installment which you have given is for more than 12 months in general, right? So the installment you are receiving in current year that is okay, but there should be some installment coming in the future year also. Then only you can apply this capital gain or loss rule. If all the installment you're receiving in the same year, then you should not be applying the capital gain rule. Got it? So, for example, you have given a machinery to me. Let's say there's a $100,000 machinery, and you have given to me on the installment sale of $5,000 each month. I'll be paying for the next 24 months. Right? In that case of scenario, you'll see the installment is in this year and some installment in the future year also. Right? Or for example, you and I entered into an agreement for the installment sale of $100,000 machinery, which you are providing me on a lease on 1st January 2022, let's say. And I'll be paying 11 installment of $10,000 each. So in this case of scenario, if you see my first installment is due on 31st of January, let's assume. Second is on February, March, April, May, June, July, August, September. And last installment I'm being paying on 31st of November or December? If I have November, right? So 30th November is my last installment, right? Even though you sold me on an installment sales basis, but all the payment has received in the current year. So no payment is being pending for the following year. Let's assume the same example. We entered into an agreement on 1st April. So the last installment will be due on next year, 28th of February, right? So 2 installments are due in the following year. Then I can apply this capital gain or loss method. Make sense? So first line, what it says, the rule applies when taxpayer receive at least one installment after the tax year. Make sense? Got it? Got this line? Yep. Shubham, Vikas.
Yes.
All good? Okay. So let's jump into the second thing. This method can be used to report gain or loss on the same of this method can be used to report the gain or loss gain or loss on the same of this is some typo error on the basis of timeshare unit method, property used to produce farming and residential street plot if the seller has made no improvement in the lot. So in these three scenarios, you can use the method of capital gain, right? First one is time shared unit. So when you are producing, when you are, or you can say, let's assume, like for example, if I say about time share unit is basically like when financing option is being involved. So you have given that machinery of $100,000 on an installment for the 12 month, right? And in that you are taking like time share unit. That means the time value of money you're charging, right? You are taking some financing income. So in that case of scenario, you can consider this as for the capital gain purpose. Second is the farming, the land which is being used for the farming purpose. So selling of that land you can consider for the capital gain purpose. Third is real estate lots. That means you are not selling the buildings, you are selling only the piece of land, right? And you're not making any improvement in that piece of land. Then also you can consider that for the capital gain purpose, right? Other than that, if you look at right hand side, if the product or service you are selling on installment sale is normal part of your inventory, right? If you are holding that particular property, or let's say for example, if you are selling car on installment sale basis and it's your normal business to sell the car, right? And cars are normally your inventory and cars are normally held for sale in the ordinary course of business, then you cannot apply capital gain method. Then it is your ordinary income method, right? Second is the section 1245 and 1250 shares. So if you are selling the small company's shares, we'll be discussing in detail in chapter 3 about this section 1245 and 1250. These are like small business unit share. So if you are selling the units or shares of the small business unit under section 1245 and 1250, that also would not be eligible for the capital gain method. So that also you need to consider for the routine ordinary business income or loss. And third thing is any trading security. So gain or loss on traded security on established security market. So if you are selling any security, whether it's like equity, your debenture, your bonds, which are being traded on any stock exchange, right? Those things also not being eligible for the capital gain. So for the capital gain method, only three things are being eligible, where you have timeshare units, where you have farming, you can say property, or you are producing some farming product on that property. And third one is the piece of real estate lot, like that is unconstructed basically, and you have not done any improvement on those piece of land. So then you can consider that for a capital gain purpose. If you consider it for a capital gain purpose, then how do you calculate that capital gain? The recognition of gain is equal to total gain multiplied by the payment received during the year divided by contract price. For example, if I do like math for you, if I do math for you here, uh, so here, let's assume you have a property, let's say machinery, that has value of 100,000, right? Installment, let's say, is $5,000. Then period, you have, let's say, 24 month, right? And then start date, let's assume 4/1/22. That is 1st April 22. So this is also you need to keep in mind. In US we use MMDDYY. In India we use DDMMYY, the date format, but in US they use MMDDYY. So in this case of scenario, what will be the capital gain and how do you calculate the capital gain for the year 1? So year 1, the start date is April, or in first installment date. End of the month. Right? So facts are clear. For example, so how many installment has been received in year 1? 5,000 multiplied by how many months? Are you guys with
8,
me? Why 8? Why not 9?
9, 9,
9 months?
9.
45,000, right? So if you see, the total amount is expected 5,000 multiplied by 24,000, right? If you see here, the total gain multiplied by the payment received. What is the total gain? What is the total gain? 20,000, right? Total gain is what? 20,000. Are you guys with me?
Yes, sir. Yes.
So total gain is 120,000 minus 100,000. 20,000 is total gain. And during the year, how much installment has been received?
9.
How much installment has been received? 45,000? Yes, no? So what is the formula? Total gain multiplied by installment received. Total gain multiplied by installment received divided by divided by contract price. So contract price is what? Are you guys with me? Contract price is what? The total amount receivable, right? So the gain is 7,500. Does that make sense?
Yes, sir.
How have we calculated?
Contract price 1,20,000 or $100,000.
Have you understood the question? The question is like machine price is 100,000, which I am selling on installment sales at $5,000 installment each month for 24 months. That means 120,000 is the total amount I am expected to receive, right? So contract price of installment sale is 120,000.
Yes, sir.
Got it? And what is the amount I am earning? 120,000 minus 100,000. 20,000 is my total earning. And in the current year, how many installment I have received? 5,000 multiplied by 9, 45,000. Right? In this 45,000, what amount of capital gain is inbuilt?
20,000 into 45,000 divided by 120,000.
Right? So that's the formula. Got it, everyone? Vikas, Vivek?
Yes, sir. Yes, sir.
So that's how we calculated this 7,500. So this is a capital gain. Now, if you see here, what is total gain? Selling price minus adjusted basis of property minus selling expense. So in this case, in this example, there was no selling expenses. So simple sales price 120 minus adjusted basis, which is 100,000. So 20,000 was total gain, right? And the contract price is sales price minus any seller's liability, that is assumed. So there is no liability we have assumed. So hence the sales price was, contract price was 120,000. Right? Make sense? Everyone agree?
Yes, sir.
So next note over here is, once the installment sale rule applied, the taxpayer must use the same rule unless elected to be out. That means the rules once you have adopted for the tax purpose, then you cannot go back. If you want to go back, however, when elect out, taxpayer need to report the entire gain from the transaction in year of origin. In this example, for example, in 2020-22, you elected to go with the installment sale rule or capital gain rule, right? In that case of scenario, what you have done over here, you have considered 7,500 to be taxed at the capital gain tax rate in year 1. Right? That's what you are doing. Everyone agree to it?
Yes.
Right? So in year 1, what exactly you are doing? You are deferring the profit to the next year. How much profit you are deferring to the next year? 20,000 minus 7,500. Right? So in this scenario, when you have elected the capital gain to be taxed, right? So you are taxing only 7,500 in current year and 12,500 you will be taxing in year 2. But if you in the next year, in the financial year 2023, if you have elected to go with the ordinary income principle, not the capital gain rule, then in that case of scenario, this entire income of 20,000 would have been taxed in year 1 itself, right? Like a normal sales. When you make a sales, what you debit and what you credit? What is the journal entry for sales? Account receivable, debit, and what you credit? Sales. Yes, no. Yes, no. Are you guys with me?
Yes, yes.
For 100,000 and 100,000, right? And then this 20,000 would be your finance income, would have been your finance income, right? If you have not gone to the capital gain system, then this is the journal entry you might be posting at the year 1, right? And the correspondingly, you would be having a cost. That is COGS account debit to inventory, right? So you might be reducing, let's say you have cost of 80,000, inventory 80,000. So what will be the outcome of this journal entry? You'll be having a profit. How much? Sales minus COGS. That is your profit. Yes, no?
Okay, sir.
No, are you agree to it? Or you have some doubt?
Right, sir. Right. बिल्कुल.
हाँ, विवेक?
इंटरेस्ट इसमें माइनस नहीं करेंगे जो फाइनेंस हम कर रहे हैं उसको?
नहीं, इंटरेस्ट हम फाइनेंस दे रहे हैं तो हमें इंटरेस्ट मिल रहा है ना. वी आर गेटिंग इंटरेस्ट. सो इट्स
नहीं,
एन
हमें
इनकम.
टोटल जैसे हमारा फाइनेंस का भी कुछ इंटरेस्ट होना चाहिए ना.
No, for example, let's assume you are
पर
selling an asset. You are selling an asset. Let's say you have a car and you are selling that car on installment sale. Let's assume your car value is $10,000, right? And the person is ready to pay you $1,000 over the period of 12 months. So you are earning 2,000 extra. So that is your interest income, isn't it?
यस,
Vivek?
यस,
So,
यस.
so that is your interest income. So income is always credit. Shubham, Divya,
Yes, sir.
Rajat,
Yes, sir, got it.
got it? So this 20,000, you could have been booked the profit in year 1 itself, if you have considered it as a ordinary income, right? But in previous year, you have considered it as a capital gain. So that is the reason, if you see what mentioned over here is when you elect out, taxpayer need to report the entire gain from the transaction in year of origin. In year of origin, right? That means in year 1 itself, you should have been shown this entire income and you should have been paid higher tax. Make sense?
सर इसका मतलब ये हुआ कि जैसे हमने फर्स्ट ईयर में कैपिटल गेन मेथड यूज करा और नेक्स्ट ईयर में ऑर्डिनरी इनकम मेथड।
Yes.
फर्स्ट ईयर में जैसे हमने 7500 का गेन दिखाया था, में अगर जो हम अपना मेथड चेंज कर रहे हैं तो फर्स्ट ईयर में सर जो हम ऑलरेडी गेन दिखा चुके हैं अपने,
So you have to amend the return.
अच्छा 105 1040
1040 you need to make an amendment 1040R.
और वो फाइल करके सर फिर सेकंड ईयर में हम 20,000 को सेट ऑफ करेंगे, है ना?
नहीं, first year में you will have been shown this 20,000, so that will not impact in your year 2 return. So if you have paid taxes to the entire 20,000 in year 1 revised return, then in year 2 you are not required to show it, right?
Okay.
So for example, here if I give it year, so let's say this is financial year 22 situation. So when you have considered this capital gain position, you have been paid tax on 7,522 and 12,523, right? But now, as you are not chosen the capital gain position, then you have to pay entire 20,000 tax in 22 in itself. Make sense?
Yes.
So you need to file a revised return for the same. Cool. Rajat, sounds good?
Yes, sir.
So other matters that impacting the installment sale. First is, generally, if a taxpayer dispose of installment obligation, the remainder of the gain under the installment sale is accelerated and must be recognized in the year of disposition of the obligation. So if you have purchased the asset on installment sale, right, and you have disposed of the entire obligation, that means which is due to you on account of installment sale in current year in itself, then whatever is the remaining gain. So if you see, the taxpayer dispose of the installment obligation, the remainder of the gain under the installment sale is accelerated and must be recognized in the year of disposition. For example, here in year 1, instead of 45,000, you have paid, let's assume, no, if you see like this example, let's extend this example. So this is 5,000 installment for how many months? 24 months, right? Which is starting from April 2022. So in the year 1, you have 9 months, right? In financial year 2022, we'll be having 12 months, right? And then in last year, you have 3 months, right? So if you see, you have, in this example, financial year 22, 23, 24, right? This is what you have, and how much you have paid? 5,000 multiplied by 9, 5,000 multiplied by 12, and 5,000 multiplied by 3, right? So in year 2, in the financial year 2023, you said, I'll pay this entire amount, the balance amount, right? So in this year, instead of 60,000, you have paid entire 75,000, and you wanted to set off all the liability. So in that case of scenario, in this financial year 23, you'll be recognizing the balance entire revenue. Make sense? If taxpayer dispose of the installment obligation, the remainder of the gain under the installment sale is accelerated and must be recognized in the year of disposition. Make sense? Does everyone agree to it, or do you need any more clarification? Yeah, Vikas, Rajat. Now we are getting into tax. Sounds complicated.
Yes, sir.
Sounds complicated or digestible?
So if
Digestible.
to come back to it again, if the if the amount is paid in the second year, right? So we will recognize it on the second year itself.
Yeah, balance all.
And
So
we will not do anything in the third year.
yes, because you have already received the money. So why, if you have already received the money, you should pay tax. Why to defer the taxes? Right? Got it? So next is a taxpayer can make an election not to use installment reporting method. The election is made by reporting all the recognized gain from installment sales in tax year of sale. So which, like we were discussing earlier. So if you have not chosen to consider this installment sale method, you would have been recognized the revenue in the year one itself in the normal ordinary income basis. Make sense? Simple one. Second, third one is a taxpayer must receive IRS permission to revoke. So here the important thing is IRS permission to revoke an election not to use installment sales and reporting method. So initially, if you have chosen installment sale method, and then later on, if you are planning to change it, then you need to take a IRS approval for the same. Right? Looks good? Any doubt here on installment sale method? So very simple. If you just very simply see left side and right side, two methods are available, right? Capital gain method or ordinary income or loss method. Ordinary income or loss method is like your normal sale. If you are making normal sale and you are earning profit, so you need to report that profit in current year and you need to pay the taxes for that same, right? If you are reporting the capital gain, then the tax law allow you to defer some incomes in the future period as and when you receive the money. So here taxpayers, tax lawmaker says as and when you receive money, you can pay the taxes, right? So you can defer it, and deferment is being only for three categories of income. One is time shared unit, second is farming, and third one is residential plot. For rest other things, you need to go with the ordinary income approach, right? So you will be calculating the normal gain and then you are bifurcating the gain to the current period installment received and deferring how much you are expected to receive in future year. If you choose for the capital gain method and in future, if you are planning to revoke and wants to go with the normal ordinary income, then in that year you need to revise the previous year return, consider that all the income in the original year, and you need to pay the taxes for those years. But to go there, to get there, to do that, you need to take the IRS approval. Simple. Sounds good? Yes, no? Come on,
Yes,
guys.
sir. Yes, sir.
Okay, so let's do a one quick practice question. So maybe Rajat, can you read this question for me?
Which of the following statements is correct if property is repossessed after making an installment sale? Okay.
What does it mean?
So if an installment sale is made and I take back I take the repossession of it again. So which of the following statements is correct?
Everyone got it? What
Yes.
is the call of the question? In case of repossess means you are taking your asset back to your possession. Right? Yeah, go ahead. What are the options?
The taxpayer does not recognize any gain or loss resulting from the repossession. The second point is the taxpayer must recognize any loss resulting from the repossession. Third point says the taxpayer must recognize any gain or loss resulting from the repossession. Fourth point says the taxpayer must recognize any gain resulting from the repossession.
So what do you feel is the right answer?
Third option.
Why?
Suppose Lexus sold a car to Mr. Shaw for $60,000 and he didn't make the payment after third installment. So the company, so the Lexus or his lender, the bank who financed the car, they send the repo persons to repossess the car. So the guys who financed the car, when they sold the car in the auction, so they must recognize the gain or the loss they resulted from the auction to the IRS.
Very, very good example, Shubham. So guys, you got it? Like what Shubham's example is? Like for example, you have sold a car on an installment sale basis. Let's keep like same example what we are discussing. Let's say you have a Mercedes S-Class, which has, let's say, $100,000 value, and you have sold it to Mr. Kamal Chhabra. And now, after 6 months, Kamal Chhabra got bankrupt. Right? He has paid 6 installment of $5,000 each. How much he has paid? How much Kamal Chhabra has paid? Come on, guys. 6 installment, $5,000 each. How much is it?
30,000.
30,000.
How much? 30,000? Yes, no?
30,000.
Yes.
But yeah, 30,000 I paid, and after that I don't have any money to pay. I got bankrupt, and now the car company owners come and they have taken a repossession of the car. Right? So the car value was how much? 100,000?
100,000.
Right? And I have paid how much?
30,000.
30,000. And now they have sold that car for $80,000. Sold the car at how much? $80,000. So does the company will recognize any gain or loss?
10,000 gain.
How you have calculated?
So 30,000,
100,000.
they already got the money and the 70,000 and they got 80,000. So
yeah, so the cost of the company is 70,000 and they sold it for 80,000. So 10,000 is the gain they need to recognize, right? If otherwise they would have been sold it for, let's say, 60,000, then what will be the situation?
lost 10,000.
Loss of 10,000, right? Now look at third point. The taxpayer, the company, must recognize the gain or loss resulting from the repossession in the same year, right? If you see the first point, the taxpayer does not recognize any gain or loss resulting from the repossession. The answer is wrong, right? Because if you are repossessing any asset, any gain or loss, you need to recognize, right? The taxpayer must recognize any loss resulting from repossession. Loss or gain, both need to be recognized. That's the reason the second answer is not correct. Same is the fourth way. The taxpayer must recognize gain or loss, both, right? That is the reason second and fourth options are incorrect. Make sense?
Yes, sir.
Okay. So let's get into the new topic, which is cryptocurrency.